Okay, let's dive right into this explainer. Have you ever actually thought about acting as a patient mentor to your own money? Well, today, we're going to look at exactly how to transform a $10,000 starting block into long-term wealth. And more importantly, how to do the whole shebang without all the stress. We're breaking down a system that lets your cash grow lazily in the background while you just, focus on living your life. I know investing can sound super intimidating, but listen, today we're following a highly structured, dead simple roadmap. Waking up your money, busting common investing myths, the 3-layer allocation system, your step-by-step execution checklist, and finally, mastering volatility in human capital. Simple, right? Let's get into it. Starting off with Section 1, waking up your money. Think about your daily routine for a second. You wake up early, spend hours commuting, and work yourself to the bone for maybe 8 to 10 hours a day. But what about your money? It's likely just sitting in a bank account, fast asleep, earning barely 1% interest a year. You're constantly chasing after money, but it doesn't do a single thing for you in return. Is that really fair? And this perfectly brings up the leaky bucket concept. Let's look at the actual math. The inflation rate sits around 3.3%, but a typical one-year fixed deposit, that yields only about 1.9%. So what does this all mean? It means your purchasing power is literally shrinking by 1.4% every single year. To put that into perspective, a $10,000 balance silently drops to around $8,700 in actual value over a decade. You're basically carrying water up a mountain without even realizing there's a massive hole in your bucket. Moving on to Section 2, busting common investing myths. Okay, we need to tear down some deep-rooted myths here. People often think saving is completely safe, but as we just saw with inflation, it's actually guaranteed to lose you purchasing power. Another massive myth, that you need hundreds of thousands to even start. No way. The truth is, $10,000 is a fantastic starting line to build the right habits. It's like going to the gym. You don't just refuse to work out because you only have 10-pound dumbbells, right? And finally, true investing shouldn't feel like a chaotic second job where you have to stare at charts all day. Your time is way too valuable for that. The core spirit of this whole strategy is passive investing. This is basically the simple act of admitting the overall market is smarter than you. So don't try to beat it, just join it. Imagine earning automatic dividends while you binge watch Netflix on the couch. It's like planting a tree. It grows slowly, for sure, but that psychological shift of seeing passive income hit your account for the very first time is truly magical. It completely changes how you view money. All right, Section 3, the 3-layer allocation system. So we're going to divide our $10,000 into 3 distinct, highly intentional layers. This specific structure is engineered to completely eliminate panic and give you a robust defensive posture right from day one. Layer 1 is your $2,000 safety net. This is 20% of your cash, and listen, it is absolutely not for investing in the stock market. Kept in a high-yield checking account or fixed deposit, this cash is your psychological armor against unexpected emergencies. If your car breaks down or, heaven forbid, you lose your job, this prevents you from being forced to sell your actual investments at a loss. It's absolutely crucial for maintaining a steady pace. Next up, Layer 2 is your $6,000 growth engine. This is where long-term wealth is actually built. We split this into a 70-30 ratio. 70% goes into broad, total market stock ETFs, which, by the way, are essentially just baskets containing thousands of different stocks for instant diversification, and 30% goes into bond ETFs to provide some stability when the stock market gets choppy. Oh, and here's a pro tip from our sources. To avoid that sheer terror of buying right at a market peak, simply dollar cost average. You just do this by investing $1,000 every month over 6 months, rather than dropping the whole chunk in at once. Finally, Layer 3. Your $2,000 opportunity bullets. You keep this final 20% in flexible, short-term, safe assets earning 2 to 3%. Why? To give you the ammo to buy more when the broader market takes a clear dip of 15% or more. This brilliantly reframes market crashes. Instead of terrifying, panic-inducing events, they become exciting, rare opportunities to buy at a massive discount. Let's move right into Section 4, your step-by-step execution checklist. Okay, execution time. First, opening an account online takes maybe 10 minutes tops. Just have your ID and bank details ready. Second, set up automatic transfers. I cannot stress this enough. This is absolutely vital. Setting up automatic transfers overrides human laziness, making investing as mindless as an automatic mortgage payment. You literally won't even miss the money. Third, pick simple, broad market ETFs. Don't stress over finding the absolute perfect fund. Just pick a broad one that tracks the whole market, like VTI or VOO, and take action. And step 4 is scheduling a biannual rebalancing. If your stocks grow faster than your bonds, your 70-30 ratio is going to get out of whack. Rebalancing just means periodically bringing it back to your target. Now, I know it sounds completely counterintuitive to sell your winners and buy your losers, but actually taking just 30 minutes every 6 months to do this mathematically forces you to perfectly buy low and sell high without having to guess market timing at all. Let's look at the math of the most boring, yet hands down most effective strategy in the world: buying, holding, and compounding over time. A $10,000 portfolio at an estimated 7% real return grows to over $76,000 in 30 years. But watch what happens when you just add $200 a month to that system. You cross $300,000. That's enough to completely change your retirement. That is the sheer power of compound interest doing all the heavy lifting for you. And our final section, Section 5, Mastering Volatility and Human Capital. Look, when market crashes inevitably happen, looking at those paper losses is going to feel terrible. But your biggest enemy isn't the market itself, it's your own emotions, causing you to sell at the absolute bottom. Having this strict 3-layer system overrides your panic during severe drops. Take the staggering 30% dip back in March 2020, for example. Investors who had a bond cushion and a predetermined system simply let it do its job until the market rebounded, and they ultimately walked away with a profit instead of locking in a permanent loss. But here's a massive mindset shift. If you're 30 years old right now, making $60,000 a year until you retire, your lifetime sheer salary alone is a staggering $2.1 million. And actually, scratch that. That's without even factoring in raises. This absolutely proves that your investment portfolio isn't actually your biggest asset right now. You are. So the ultimate takeaway here is to prioritize your human capital alongside your portfolio. Don't spend all your time stressing over squeezing an extra 1% yield out of the stock market. Instead, invest time in yourself, learning new skills, gaining experience, building your network. These things can double your salary over a few years, which heavily accelerates the amount of cash you have available to passively invest. Your career growth literally feeds your investment engine. When you finally start making your money work for you, you're going to notice something amazing. Passively investing shrinks your daily stress and significantly grows your confidence in the future. It proves that true financial management isn't just about hoarding a giant pile of gold. It's essentially about buying your own freedom. It's about giving yourself the ultimate power of choice in life. So let's end on this. The market will always have risk, and there's always going to be uncertainty. So stop waiting to feel 100% ready, because honestly, you never will. The clock is ticking on your compound interest. Will you spend just 30 minutes today to finally wake up your money? Use this explainer, follow the checklist, and just take action today to build the habit. Your future self will absolutely thank you.